We are going to talk about that rhythm. We are going to talk about the 7 year cycle, a pattern so consistent, so brutally reliable that ignoring it is financial suicide. This isn't a conspiracy. This is the market's metabolism. And right now, the signs are flashing. The next reset is coming. The question is not if, the question is whether you will be one of the ones wiped out or one of the few positioned to buy when there's blood in the streets. This is the part nobody wants to hear. Most of you will do nothing with this information. You will hear this, feel a pang of anxiety, and then go back to scrolling, to complaining, to hoping that your job, your 401k, your vague sense of optimism will be enough to protect you. It won't. Money doesn't care about your feelings. The market doesn't care about your hopes. It only responds to action, and inaction has a very, very high price. Let's be brutally clear about why most people fail cycle after cycle. They work hard. They may even save, but they think with their emotions, not their logic. They fall in love with stories, the story of a hot stock, the story of a secure job, the story of a government that will save them. They treat money as this abstract thing, a scorecard, a means to buy status. They don't respect it. And when you don't respect money, it will find someone who does. It will leave you. This is the Kevin O'Leary mindset in a nutshell. It's not about being cruel. It's about being clinical. Money is a tool. It is a unit of measurement for value exchanged. Period. Your goal is not to get rich. Your goal is to build a machine, an asset base, that generates cash flow independent of your time. While everyone else is chasing the next dopamine hit from a rising stock price, the disciplined thinker is obsessed with one question. Is this putting cash in my pocket every single month? If the answer is no, it's speculation. It's entertainment. And you are not in the business of entertainment. You are in the business of survival and conquest. Look at the 7 year cycle through this lens. It's not magic. It's the lifespan of human memory and the limits of pain tolerance. A crash happens. The pain is searing. Fear is dominant. For 2 years, maybe three, people are cautious. They respect money. They save. They avoid debt. Then as the scars fade, complacency sets in. Year 4 or 5, the good times roll. Gains are made easily. Stories of overnight success return. The memory of the pain is replaced by the addiction to the gain. Greed becomes the dominant emotion. Risk is forgotten. Leverage piles up. People start believing this time is different. By year 6 and 7, the market is bloated on this arrogance. Valuations detach from reality. The assets being bought are not being bought for their cash flow, but for the greater fool, the belief that someone dumber will pay more later. This is the peak of emotional decision-making. This is where the logical mind exits the party. And then, a trigger, often a small one, a rate hike, a geopolitical shock, a default, and the whole house of cards built on emotion and leverage collapses. The cycle resets, the fearful are wiped out, and the logical, those who have been quietly building cash flow and preserving capital, step in to buy real assets at cents on the dollar. This is why most people stay poor. They are perpetually on the wrong side of this cycle. They buy when everyone is euphoric and sell when everyone is terrified. They are market tourists, led by the headlines. Their money is emotional, reactive. It has no discipline, no strategy, no respect for the cycle. Respecting money means understanding its nature. It flows toward competence and away from chaos. It rewards the rational and punishes the sentimental. Think about it. Do you think a surgeon gets emotional in the operating room? Do they hope the procedure goes well? No. They have a protocol, a process. They have mastered their emotions because the stakes are too high. Your financial life is no different. The stakes are your freedom, your security, your family's future. Yet you treat it with less seriousness than choosing a Netflix show. The coming part of the cycle is the painful one, the correction, the reset. For the emotional investor, this is a disaster. For the logical thinker, this is a fire sale. This is where you separate sympathy from strategy. You do not fall in love with companies. You do not fall in love with stocks. You fall in love with balance sheets. You fall in love with cash flow statements. When the market panics, it throws the good out with the bad. Your job is to have the cash, the dry powder, and the cold, unfeeling nerve to buy the good assets at a discount. This requires a war mentality right now. It means delaying gratification today for sovereignty tomorrow. It means looking at every dollar not as a dollar to spend, but as a soldier. And you are the general. Where do you deploy that soldier? Do you send it to die on a trivial purchase that gives you a fleeting joy? Or do you marshal your army, build your reserves, and wait for the moment to deploy them with overwhelming force on a high-value target? This is the hard work no one sees, the boring work. The monthly tracking of every penny in and out, the relentless focus on increasing the gap between what you earn and what you spend. Not so you can buy a fancier car, so you can increase your buying power when the cycle turns. While others are financing luxury, you are financing your future ammunition. And this brings us to the most dangerous lie of the modern world, the single income. Relying on one source of cash flow is not a plan. It's a prayer. It is the ultimate vulnerability. When the cycle turns and layoffs begin, that single stream dries up. Panic ensue. Assets are sold at the worst possible time. The logical thinker does not accept this risk. They build multiple streams, a side business, royalties, rental income from a property bought in the last downturn, dividend stocks. The goal is not to work 80 hours a day. The goal is to engineer a system where money works for you from several different directions. So if one stream is hit, you are not paralyzed. You are annoyed. Failure is part of this process, but failure is not an identity. It's a receipt. It's the cost of your education. The emotional mind sees failure as embarrassment, as a final verdict. The logical mind sees it as data. You tried a tactic, it didn't work. The market gave you feedback. Now you adapt, you iterate, you do not personalize it. Money doesn't care that you tried hard. It only cares if you got the result. Excuses are the currency of the poor. The market is rigged. I don't have enough to start. I need to wait for the perfect time. It's too complicated. These are all emotions dressed up as logic. They are surrender documents. The cycle does not pause for your excuses. The crash will not delay itself because you weren't ready. Time is the one asset you can never ever recover. The rich understand that time is the multiplier of money. They trade money for time and then use that time to build systems that make more money. The poor trade all their time for a fixed amount of money and then wonder why they can't get ahead. Look at your life right now. How much of your time is being traded for dollars that stop the second you stop? That is the trap. Breaking that trap requires an upfront payment of pain, of studying while others are sleeping, of saving while others are spending, of learning a new skill while others are being entertained, of saying no today so you can have the power to say yes tomorrow. The signs of the late cycle are all around us. The irrational exuberance in certain assets, the normalization of massive debt, the belief that central banks will always bail everyone out, the sheer number of people who have never experienced a real grinding bear market. This is the setup, this is the greed phase, and it will be followed by the fear phase. It is inevitable, not because of charts, but because of psychology. Your mission, starting this very moment, is to conduct an audit, not just of your portfolio, but of your mind. Are you making emotional decisions or logical ones? Is your cash flow robust, or is it a single fragile thread? Are you building an army of capital, or are you disarming it with monthly subscriptions and lifestyle inflation? Do you respect money enough to master it, or do you merely wish it would appear? The 7-year cycle is a timer. It is counting down right now. You have a choice. You can be a passenger, watching the numbers on your screen go up and down, subject to the storms of emotion and the whims of the crowd. Or you can be the captain. You can batten down the hatches, secure your cash flow, sharpen your analysis, and prepare to navigate the storm. The storm is not your enemy if your ship is strong. The storm is what clears out the weak competition and hands you opportunity on a silver platter. But you have to see money for what it is, a tool, a resource, a means to an end. You must respect it more than you love the things it can buy. You must be willing to be boring, to be disciplined, to be coldly rational when everyone else is losing their mind. The clock is ticking. The cycle is turning. What you do in the quiet days before the storm determines everything. Will you be the one buying when the crash comes, or will you be the one selling panicked, handing your wealth over to someone who was prepared? The market doesn't care. Money doesn't care. The cycle will continue with or without you. Make sure it's with you. End with the sound of a single sharp clock tick, then silence. Fade to black.